After this video, you will be able to pass the FTMO challenge. Alright, so let's get right into it. In this video, I will share with you a very cool strategy that you will be able to use in order to pass the FTMO challenge successfully and get funded. Alright, so this strategy will be a day trading / scalping strategy that will take place on the M15 time frame. Okay, and you will only need to add one indicator. This indicator is the 200 EMA. Okay, so you go right here, you click EMA, you click on moving average exponential, and then you click on its settings and you make sure you set the length at 200. Then you can choose whatever color you want for it. I have it as pink. All right, this is the first step. Second step, I would want you to pause the video and copy these fib settings. Okay, so pause the video right now and copy these fib settings. Okay, now I assume you already did that. Let's get into the rules of the strategy. This strategy is actually very simple to use, and I will keep it super straight to the point. All you need to follow is market structure, okay, higher highs and higher lows if we are in an uptrend, okay, like this, and lower lows and lower highs if we are in a downtrend. Okay, this is the first thing. Now, the second thing, when we have bullish market structure, we want the price to be above the 200 EMA to look for setups. If we have bullish market structure like this, but we are below the 200 EMA, we won't look for any setups. Same goes for the bearish structure. We want to see bearish structure like this forming below the 200 EMA, not above it. Okay, this rule is very, very important. Now, let's move on to the second rule. Once we have a break of the most recent high and the price is above the 200 EMA, we will then place the fib and look for a possible entry in one of our discounted areas. We would like to have an entry at the 60%, between the 60 and the 88% levels on the fib. That's our discount area. That's our entry area. That's where we will look for entries. Okay, once price gets in that zone, we will either enter on the M15 or we will go one time frame lower and look for a candlestick pattern in our direction, and after that we will enter the trade. Okay, so the rules are very, very simple. Now let me show you some live examples. Okay, so I'm gonna use recent price action, all right, and show you some trades that you could have caught using this strategy. And I will also use the bar replay actually. All right, so check this out right here. I will start off with this example. So price is currently floating above the 200 EMA, okay? And if we look at market structure, we had a high here, then we had a small pullback, and then we broke above, we broke this high here, okay? We had a BOS, a break of structure right here, and we created a new high. All right, so now we can place a fib from this higher low to the newly formed higher high. All right, so now all there's left is for us to get a pullback. So let's wait for the pullback. We can adjust the fib accordingly, and then we will wait for price to get in our discount area, starting from the 60%. Okay, that's where we will look for entries. Boom, we are there. We are at the 60% area, and that's where we will go on the 5 minute. And on the 5 minute, we would look for a candlestick pattern right here. There's no candlestick pattern for me to enter. So let's just wait. Let's just wait. Okay, so we are forming a W formation or a double bottom on the 5 minute. That's a great confluence. And another added confluence is the 200 EMA on the 5 minute. Okay, so we have two added confluences. So now let's look for a candlestick pattern in our direction and we will enter for a buy. Okay, so right here, we would have had a bullish engulfing right when this candle closed. We always, again, this is also a very important rule, we always wait for candle closure. So here, let me actually remove the 200 EMA for a second, just for you guys to see clear. Here we had a bullish engulfing. Okay, so for me, that's a candlestick pattern. I would enter right on the candle closure. And now for stop loss, you have two options. You can either be aggressive with it and place it below the most recent low, or if you want to be conservative, place it below the next fib level. Okay, so in this case, let's say we would have been aggressive. Now for the take profit, if you want to keep it super simple, aim for the 0% level on the fib. Okay, that's pretty much the most recent high or the most recent low based on the M15 time frame. Okay, so now after the trade is entered, let's wait and see how this will play out. Of course, another very important rule is once price is at 1-to-1 or at 1-to-2, I would recommend moving your stop loss at break even. Okay, so this would have been a break even trade, but now since we are in the golden zone again, that's how I like to call it, or the entry zone, we could go again on the 5-minute and look for another candlestick formation. And we have it. We have another bullish engulfing, and check this out. We actually have a head and shoulders pattern on the M5. Okay, so this is the right shoulder, the left shoulder. This is the head, and this is the right shoulder. Okay, so all these confluences lined up. This is great for us. Okay, this is another confirmation for us to actually go ahead and take the trade. So we have our bullish candlestick confirmation, our bullish engulfing. We enter right at a candle closure, and let's keep it aggressive. Okay, let's keep on placing the stop loss below the most recent low and the take profit on the 0% on the fib, and this would be a crazy risk to reward ratio. This would be a 13R. Okay, so if you risk $100, you would have made 1.3K on this trade, if of course it will be a successful trade. Let's see how this trade will play out. Okay, very good reaction, but again, break even. Okay, again, this would have been a break even trade. It went for 1-to-7 risk to reward. Now of course you could also add another rule where you would say if price goes 1-to-5, for example, you would close 50% of your position, move stop loss at break even, and let the rest run till 0%, because this would have been a very good run anyways. But again, we are back in the golden zone, in our entry zone. So once again, we go on the 5-minute, because you could also stay on the 15-minute. Don't get me wrong. You could also stay on the 15-minute. This would have been your entry, this doji candle right here. Okay. In this case, I guess there was no entry here in this first scenario, because this is not a valid candlestick pattern for me. But in this scenario right here, this would have been your entry, and then again it would have been pretty much the same thing. But if you want to be more specific, just drop down one time frame and look on the 5-minute. Okay, so again, we are in our buy zone. Let's go on the 5-minute, and we have a doji. Okay, we have a doji right there. We would have entered right on the closure. Stop loss would have been right below, and then again take profit the 0%. Okay, so let's go back on the M15 and play the market to see how this would have played out. All right, so again, unfortunately this would have been a break even, but let's see if we would have had a re-entry. And yes, we would have had a re-entry. So again, check this out. Price ran 1-to-4 and then it came back to break even. So like I said, if you have a rule where you would say I would close half of my position at 1-to-5, that would be very helpful. Okay, and then a re-entry would have been right here. Okay, so let's use the bar replay once again. Again, we are in our buy zone, our entry zone, and boom, check this out. Again, another doji candle. This would have been our entry confirmation. Stop loss would have been right below it, because that's the most recent low. Okay, not below this low. This is the most recent low. All right, not this one from the left side. This is the most recent low right here. I know this would have been a very tight stop loss, so you could have put it right here just to have it a bit bigger, like a 4 pip stop. Yeah, let's put it at 4 pips. Okay, this would have been a 4 pip stop. And again, take profit on the same level. And let's see on the M15 how this would have played out. And price is moving upwards. And to be fair, this is where I would have closed the half of the position at 1-to-9. Okay, after you would see consolidation like this, after you see consolidation like this starting to form, I would suggest to close half of your position and then leave your trade running risk-free with the stop loss at break even, okay? And after that, if we played, again, this would have smashed the final target as well successfully, okay? So in total, if you would have let this trade run without closing partials, this would have been a 1 to 12 risk to reward ratio, meaning that if you would have risked 1% on this trade, you would have literally passed your whole challenge in one trade, okay? And this is literally from today. This is literally a trade from today. Okay, I'm not going back in time. I'm not cherry picking. If you stick to the rules of this strategy and if you do your own diligence to backtest it to get the hang of it, because like you saw, there's a set of rules that you need to respect. Okay, if price action is above the 200, I only look for bullish market structure. I only enter if I see bullish candlestick formations. Then I ensure my stop loss at break even after 1-to-1 is reached. Okay, these rules are super important for you to follow in order to be successful to be successful with the strategy. All right, and let me show you one more example. This example here would have been a successful one. So check this out. Here we would have had another break of structure. Okay, so you would have placed your fib from the higher low to the higher high, and you would have waited for the 60% level. But check this out, this was a massive drop. But let's see, I don't think we would have had an entry. And no, check this out, that's why it is super important to look for candlestick formations, because in this case, if you would have had a buy limit here, for example, you would have got stopped out. But instead, because you look for candlestick formations, once price got here and you would have saw only red candles, then you wouldn't have entered. Okay, and then after you see that price goes below the 200 EMA on the 15-minute, that's when you switch bias and you start looking for bearish market structure. Okay, so I hope everything made sense. But like I said, this is a very simple strategy to understand and to apply, but you gotta take your time and backtest, okay, to get the hang of it, and then start testing it, either using the bar replay if you have TradingView Pro. If not, then go ahead, open a demo account and start trading it for a couple of weeks. That's what I would say, and use proper risk management, okay? Apart from this, if you guys want to be able to see the trades that I am taking every single day, please go ahead and click the link in my description to join my free Telegram group where I literally send out trades every single day, okay? So make sure to go ahead and check that out if you are interested. And please also make sure you are subscribed to not miss out on future content like this, because I'm pretty sure you guys will enjoy this video, and more videos like this one will come in the future, so you don't want to miss them out. All right, and yeah, to be fair, this is pretty much it for today's video. I hope everything made sense. If there's any questions, please feel free to drop them down below. I always make sure to reply to every single one of you, so don't hesitate. Go ahead and ask me whatever you want. And yeah, that's pretty much it. I wish you all a lovely day ahead, and I will see you all in the next video. Goodbye.